lot of us is not having enough lead flow. So I just want to review a couple things and then we'll get into the heavy stuff. So if you do not have lead flow coming in, you need to put your orders in. If you're new to my organization, get your order in. You contact us and we'll share with you the $3 mortgage protection leads that are 30 days to 90 days old that have just been recycled that nobody sold. If you want to get on a new lead order list for anybody that knows how to sell this mortgage protection, get on a new lead order list and stop being afraid of leads. Invest into your leads. You must invest into your leads. If you don't, you're dead. If you own a company and you got a storefront, you got a brick and mortar location, you need to have advertising. That's what this does. So I just want to get that out of the way. Second is if you want to get into the business of recruiting and building an organization, then you must start using the techniques I share with you. Use social media. It's absolutely free. And if you want more on that, I give a few webinars that have taught that, and I can teach that again if you guys learn something about that. For this webinar here, what we're going to go over is I want to teach you how to make some money this week in the field by providing people the evidence that they need to purchase your products. So it's just like that. If you show them the evidence that they need, they will purchase your products and you will make more money. And you do that with these two tools here. This technique works, guys, so listen up. You use this and you use this. That's it. Now, I do have a sheet of paper that has a list of their bills. It kind of strategizes you to get a list of the bills so you know what's going out compared to what's coming in. And that's what helps me sell larger premiums by knowing a few things. I know what their Social Security income is. I know what their 401k has in it. I know what life insurance they have. I know what equity's in the house. I check the policies. I prove the numbers, and I prove the numbers. Bottom line is I prove the numbers. I talk about inflation a lot too, because that's a crippler to many people. I talk about where Mrs. Jones will be left if, God forbid, something happens to Mr. Jones. I mean, we will review that. So just like this is set up, that's the way this sheet looks on here. I will slice this page down just like this, and I will put Mrs. Jones's name. I used to do this because I forgot people's names, and then I put their age too, so age 65 here. And then I will simply say, out of the two of you, who earns the two of the higher Social Securities? And one of the reasons why, and this is how I build rapport to the point of trust. Instead of sitting around staring at pictures on the wall and discussing their history, I do that while I'm getting introduced to them. But in my presentation, I do nothing less but get the numbers proven. I find what is the biggest word that I can put on this board for you guys to come to realization with is the need. It's not my need, it's not their need, it's the real need. So you have to figure that out. What the hell do they need this stuff for? And you need to explain it to them in numbers, through numbers, through the actual numbers that they may end up with. You are the worst case scenario individual. Now people, when you're talking to them, they always want to hear the best of things. When you're explaining this stuff to them, you need to tell Mrs. Durham, Mrs. Jones, I am here to tell you the basis of the worst case scenario that could possibly happen to you. And on top of that, I will give you the best case scenario that happens also. But at the end of this ride, you're going to understand every aspect of why I'm here. And that's what allows me to open the door up to explain 401ks into annuities too, is because they're allowing me to explain everything. And there's nothing held back. So Mr. and Mrs. Jones on the sheet. And then I asked, out of the two of you, this is important for you to learn. Out of the two of you, who earns the two of the higher Social Securities? The reason I'm asking, and I give a reason why I'm asking. If you just end it and just ask about numbers, they may not be interested in giving it to you, but if you give a reason of why you're asking, they will give it to you. The reason I'm asking is because Mrs. Jones, God forbid that Mr. Jones, something God forbid happens to him, I want to know where you lie if something happens to him, because you're going to receive his Social Security. And a lot of you have been over this with me, but this is a review for new people. This takes 6 to 12 months, Mrs. Jones, for you to receive, okay? Worst case scenario, you got 12 months to wait to receive, let's say it's $1,500. And at this point, I'm just guessing. So this is why I'm asking. So out of the two of you, who earns the higher Social Securities? And usually it's Mr. Jones. So Mr. Jones, let's say he earns, in this scenario, we'll say that Mr. Jones earns $1,500. Mrs. Jones will say that she earns $1,000. Now, as you can see, the instant that he passes away, that income's gone. So you have a reason, now you have a need, you have a reason to sell this stuff, because once you find out what the bills are, and if you can just find out what the bills are real simply by asking this question, you at the end of the month, Mr. and Mrs. Jones, are you guys left with anywhere between $250 to $500 a month left over after all your bills are paid, after your credit card's paid? Okay, yeah, we're left with that. Which one are you closer to? We're closer to $500. Now I understand what I have left to work with. So I can sell based upon, I know that they have 500. So there's not a problem with them financing this. Even if they were on this end of the board, there's still an issue. They can afford $100 to $150. Over here, they can afford $300, $200, and $100 a month. If you explain it as an investment, then somebody's getting this money, okay? Now, the problem a lot of people may have is getting the right products in place, and that's another thing that we need to explain. If I sell a lot of, we present to sell a lot of index universal life products, meaning that they have a high payout for the individual. They come with 7.14% interest on the cash value. They come with living benefits. They come with cash value. They come with, these living benefits are great inside these products. They come with the death benefit. You can overfund it. You can earn a ton of money by overfunding these damn things. So if you can teach your clients how to overfund, you can literally open up a cash value sheet, which I'm going to show you guys. You can open up a cash value sheet that provides them with the education that their money's not going up into the ether, that it's literally going into something that has the ability to earn them more than they ever put in. So that's, I don't have one actually, so we'll have to skip past that. But at the end of this ride, you have the ability to show them high interest, living benefits, cash value, the death benefit, and it all makes sense to them. Now you just have to get down to the premium. You know, so that's why I ask, at the end of the month, you have in between $250 to $500 left. And the reason I'm asking is because I want this to fit in your budget, because this is something that we have to do until, God forbid, Mr. or Mrs. Jones passes away. Of course, your best return on investment is that you put $100 down and he passes tomorrow, of course. And that's kind of a laughing joke inside the house that Mr. Jones would pass away quickly. So what we're going to figure out is Social Security income, how to get the 401k out of them, or any investment opportunity. We're going to find out if they have life insurance. We're going to check the policies, and we're going to prove the numbers. We're going to explain inflation and downside market volatility also while we're doing this. So I'm going to erase this stuff here so I can present to you the opportunity that I present to individuals in the home. So out of the two, who has the two of the higher Social Securities? I know that Mr. Jones has $1,500. I know that Mrs. Jones has $1,000, okay? Now, this is important to explain. Now, Mrs. Jones, it's going to take you 6 to 12 months to receive this $1,500. So you're going to have to live off of this. So right as of now, would you have enough money to be able to survive if that was your only income? And that question can sometimes pop Mr. Jones into telling you that he has a 401k or some kind of pension plan in place. So, Mr. Jones, on the side of this, do you have anything else that Mrs. Jones would inherit to protect her from the fact that she's losing this money? This is where it opens the door up for me to see and hear that they have something that is stock-based product, a pension or 401k, 403b, things like that, or even annuities. You can sell an annuity into an annuity, guys. You can even take life insurance cash value and turn that. You can take cash in the bank. There's lots of ways to sell these things, and we'll go over each one. So I have $1,500. I'm going to erase that. Yes, I have the ability to get this into an annuity. By the fact is, he's going to tell me he has $250,000 in a 401k. Okay, have you touched it yet, Mr. Jones? Are you drawing from it? No, I don't need the money. Okay, that's fantastic to hear. But you know what I'd like to, like I told you in the beginning, I want to tell you all the aspects of the benefits of me being here and allow you to get all the benefits of me being here by explaining some of the things that people are doing today with this kind of money. Now, I just want to tell you that you should be doubling that money every 10 years. That's how it works today. If you're not doubling that every 10 years, then you're not in the right product. So I know that the 401k goes up and down, and you can show them that by drawing the line. You literally go like this. And as you know, Mr. Jones, you're participating in these downsides, only hoping that these upsides beat the downsides, plus you got fees and what have you. So we want to eliminate that. So the first thing you want to do is get through the life insurance or mortgage protection aspect of this. But we do know now that he has $250,000 as a 401k. Okay, Mr. Jones, she's going to receive that. She has the $1,500 on after you pass away. Now, do you guys have any life insurance, existing life insurance? Yes, we do. What do you have? How much does it pay to Mrs. Jones, Mr. Jones? I have a policy for $50,000. Do you know who that's with? Yes, that's with ABC Company. Do you know what the premium is on that, by the way? Yeah, that's $50 a month. Okay, that's a pretty good price for that, so he may want to keep that. But the question is that term or is that whole life? Do you know the difference? Is that the old style products or is that the new stuff that's out there? So that's an older product. I've had that. That's whole life, I believe. I've had that for 20 years. If I hear that, guys, it goes off in my head that there's a lot of cash value buildup in there. Do you guys ever see what the cash value buildup is in this policy? No, we haven't. So one of the things I want to do is get this policy on the table. Why? Because I want to check out what the cash value is, and this can be a way to sell this product. I want to be able to take this product off the table to fit mine in, and you're going to run into this a lot out there, so you better be prepared. If you're just out there trying to sell products on top of their products, it becomes difficult to sell. You're not, because they have another bill. It's just another bill to them. But if you can take this one off the table and replace it with yours, you're going to have the ability to sell high premiums and make a lot of money in this industry. So you have a $50,000 policy. It's $50 a month. He's had it for 20 years. You guys can do the math. Let's say there's $15,000 in cash value in there. Well, I can explain to Mr. Jones that subtract this 15 from what they owe you. 15,000 of this money is yours, Mr. Jones, because they only owe you $35,000 out of that deal now. So 15 of it's yours, 35 of it's the life insurance. So if you guys need money, I would respectively tell you to, let's take a look at something that I have, see if I can get close to that number and get you 50,000, or just even if I can get close to that, and see if we can make you 15,000 bucks today. Does that sound good? Because that money's yours, and we don't want the insurance company to get it, do we? So let's see what we can do. What you got to do next is either look at the policy's cash value section. Look at the cash value section in the policy. Mr. and Mrs. Jones, you have this product here. Do you have the policy? Yes, we do. Have them go get the policy and have them bring it out on the table. Look at the cash value section. If they do not, and you know that the company's name is ABC Life Insurance, you Google that number, say, Mr. and Mrs. Jones, what I'm going to do is I'm going to contact the company real quick. Let's just see what this product holds for you and make sure that we know every aspect of this policy. Since you were looking at new products, maybe this one's all you need. So let's see if this one's good enough for you. And I always respectively tell them that this one may be good enough for you. So they don't thinking that I'm prying. Let's just see if this one's good enough for you. Maybe we don't have to move on. So we want to check the cash value, check the premiums, make sure the premiums never go up, things like that. So you call the company, get this out of the way, get this thing off the table somehow, okay? Replace it using this $50. You know that they called you in. They knew it was going to cost more money. So get this to $100, get it to 200. Try to replace this due to their health being good. If their health is bad, then you're going to have trouble. Then you may need to add it on. Some people need cash, though. This could turn into an annuity. This could turn into life insurance. It could turn into cash for any reason that they need it. I've taken cash value, guys, and helped people pay off the back end of their homes. I've helped them pay off credit cards. So it's a major part of your strategies inside the house is replacing products, but doing it smartly and doing it the right way. Index universal life products, you're not going to have a problem in the world replacing those. Older index universal life products comes with ton of cash value, but they come with a ton of COI. COI is cost of insurance. This is on the rise. 20-year-old policy with COI, that would mean that that product's coming off the table. It means that the cost of insurance is so high that it eats away at the cash value and it takes the policy off the table due to the cash value depletion. So this is a part of the index universal lives that we try to avoid by having them overfunded. They weren't taught that back in the day. These are great policies to replace them, because once you contact this company, Let's say they've had this for 20 years and there's only $3,000 left in the cash value. The cost of insurance is $100 a month. Plus they're paying the premium. So they're losing $100 a month out of this. How long do they have in this product? Plus, this goes up every year. So this will probably be 110 next year, 120 the year after that, and 130 the year after that. You guys need to know this stuff. You show them this on paper. Say, this is why I want to check this policy, because this is how this old stuff works. They're taking from your cash value. I just did this the other day. I got a woman $6,000 and replaced it with something close to what she used to have. But it doesn't matter. No matter how they look at this, they're losing this product. They have about 2 years left on this product, maybe 2.5, 3 years max. You get them out of it, you get the cash value in their hand, and you replace it. So it's easy when you run into index universal life. But what was the first step that I did? I asked them what they had in place. It's a part of your language in the home is not to just sit down and sell life insurance. It's to find the real need. That's a part of the real need. That's being a professional and replacing this thing, because they would have lost it. Become a real financial professional and you'll make more money you can imagine. So I found that due to the fact that I asked about Social Security. I asked if they had anything left for Mrs. Jones to replace finances lost by his Social Security. I now know that they have life insurance, and sometimes people pull 8 policies out on you. You take 8 premiums and you put them together into one big premium, you got one big policy to sell. Hell, that's how sometimes I've gotten $600 to $2,000 premiums out of people, is by collaborating all the policies together. And I asked, that's how I got to the policies. I said, do you have anything in place now? Who's it with? How much premium you spending? And do you know if it's the old stuff or the new stuff? Is it term or is it whole life? It does. If they say it's whole life, do you know if it's index universal life or is it a universal life? Sometimes they know. Now, past this point, when you sell the product, you did a review, you have your product in front of them, you know what it is. If you're selling final expense products only, like you got Prosperity or American Amicable and things like that, you're not going to be able to get the big numbers out of these unless you do term. Now, if you want to show cash value like they're used to, you've got to do the index universal life. So it's the only way to get the larger numbers unless you're doing term. If you do term, I suggest you advise them on return of premium so they can at least get the money back. Use the products to sell the policies too, because if you use the advantages that the products bring, you got to know the stuff that the products offer. Does it offer return of premium or not? Does it have living benefits or not? Does it have cash value? What's the interest? Every time I'm selling a whole life policy, even when it's with final expense, I tell them it has 3% interest on the cash value. That means you got a little savings account put aside. So every time you make a premium payment, it's going into a cash bucket. So Mrs. Jones, here's the scenario. If this is on Mr. Jones and it's worth $10,000, you get $10,000. Let's say 15 years goes by and you, God forbid, you pass away first. And Mr. Jones doesn't need this policy anymore. Well, he's been spending $100 a month on it, so it's got cash value. Let's say there's $8,000 built up into this, or let's take a little lower. Let's say there's $5,000 in here. All he has to do is cash the policy in. So it's kind of like 2 policies in one. You understand? So Mrs. Jones, this is like 2 policies in one for the price of one. Basically, you get 2 policies for the price of one. That's how you sell policies. Talk about the cash value. Don't talk about the death benefit all the time and just what that does for the individual. Make it 2-sided. So Mr. Jones benefits from the cash value. Mrs. Jones benefits from the death benefit. And you'll sell more product that way. Now, with the index products for the annuities, guys, if you run into an annuity and it's variable, that's bad. If you got a variable annuity out there that somebody has, you need to replace that. That's a market-based product solution to them downsides. Let's get them indexed and out of that. You can ask them, do you have the annuity product here? Can we take a look at it? Can we look? Do you have lines like this that they send you, Mr. and Mrs. Jones? Do they show you this kind of stuff in your illustrations that they send in the mail to you? Yes, they do. Can we take a look at that? I just want to see what the performance is like. Yeah, we can show you that. Okay, great. Now, you can also flip an indexed annuity that's at 3% interest when we have products that are at 8% to 12.5%. So if they're at 3%, you just doubled the amount that they're getting every year. Plus, there's probably bonuses. The other day, Alyssa got somebody a 7% bonus on 145,000 or something like that. So I don't know what that made the guy. It's 8% on 145,000, but it's a few $1,000s that he's coming out of the gate with. So you show them the bonus, man. Tell them there's a bonus. Tell them it turns into life insurance. There's also a death benefit. In the market, there's taxation, there's higher taxations, there's fees. They spend a lot of money to have market-based products is the bottom line. I'm not saying that they don't need these things to get started in life, but at the end of life, when this is the last little bit of money that they have, why make it volatile to the market? If somebody only has $100,000 left to retire on, and they got 20 years of life, well, they better damn well start doubling that money due to inflation. Inflation's a big one. And the fees that are involved, the downside of the market participation. So they're basically not going too far further than this. At the most, in 20 years, you might see it at 150,000. You could look by its past history and say, look, what has it earned over the past 30 years? You tell me in 30 years, you only have $100,000? I'm coming at you telling you I could double it every 10 years? Buy a 10-year, 20, 30-year look back at these companies. You can prove it by taking a look back at the company's performance. So as soon as you do an illustration, which I advise you do on the spot, some people like to set an annuity appointment from the life insurance appointment and then come back and then get the call to say, you know what, we're not interested. I talked to my stockbroker. I don't need to do this. You better get on it while you're in the house. Mr. or Mrs. Jones, do you have a computer? Yes. Does it have a printer? Yes. May I use it? I just want to make sure that you guys understand all your options. I'd like to show you an illustration. It's just an illustration. It'll show you your options for the future. Yes, we do. Okay, let's get this started. I'm going to call the company up. I'm going to get an illustration sent to my email. I'm going to get that email on their computer, and I'm going to print it up on their computer. And that's how you do that. When you show them the illustration, you can go to the 10-year looks backs, and it says the recent, the past, it tells you the past. So in the past 10 years, this is what you would have been at. So if that's $100,000, if you were with them for the past 10 years, Mrs. Jones, you'd be at $205,000 right now. Now, here's the exciting part, is you guys still got life left. So after this goes to $410,000 or even more, because it could grow more. Hell, it could be $430,000. Now, it never loses money. That's the great part about it. It's just like your 401k. It doesn't lose. It does not participate in the downsides of the market. That's the great part about it. And that's why it makes it so exciting. It has no fees. Why are you paying somebody to work with your money? You don't have to. The fees alone could be $100 to $1,000 a month. We don't know. They're taking it out of finances that could be going into your account. So you just have to know how to explain these things and make sure that they understand. The objective is to get them to understand the real numbers, the true numbers that they're capable of. Just presenting what they're capable of doing. That's all you're doing. And you participate with them in the actions by writing the stuff down with them. Guys, I'll go through multiple. You see how many times I erase that? That's how many times I go through a sheet of paper. Inside the house, I'll be like this. And I'll explain something else. Here's another one. Let's take a timeline for mortgage protection. I will add up. Here's a good solution for you guys to find out what equity is when you're selling mortgage protection. When you're selling mortgage protection, you are focused on protecting the equity. 9 times out of 10 in this situation, without the 401k, Mrs. Jones would have to walk out the door due to the fact she only has $1,000 income a month. So for people that only have $1,000 a month and their mortgage is $1,000 a month, if Mr. Jones dies, she needs time to sell this house. So your objective is 2 things when selling mortgage protection. Is 1, to buy them time 9 times out of 10. You're never going to pay off the whole house. They just can't afford to do it. It never happens to me anyway. The second part is to pay off the back end of the house. So if there's 10 years left on the house, that they can use the cash value from the Index Universal Life, or they can use the return of premium in a term to pay off the back side of the home. But to get equity, let's say it's $1,000 a month, okay, for the mortgage. You multiply that by 12 months. That's how much they spend in a year. You multiply that by 15 years. That's how many years we want to find the equity in. And then you divide it by 2. And that will give you how much equity is inside that house. On average, it's close. Because not all the 1,000 is going towards equity. So let's say that this house is $1,000 a month. Let's say there's $80,000 in 15 years in this home. I don't know what it is, but this is what they're trying to protect, is $80,000. So when you draw a timeline like this, and it's 30 years, 15 years, and 1 year, I got $80,000 that you do not want to get, you do not want to lose, Mrs. Jones, because I'm going to tell you right now, here's how I'll draw this out. There's 2 people going to win this scenario, Mrs. Jones. If Mr. Jones passes away, there's 2 people after your home. It's you, and then there's the bank. You do not want the bank to win, obviously. They're going to snatch up every dime you've ever put into this. Then they're going to resell the house at the appraisal price, and they made a boatload of money. So your job, Mrs. Jones, is to protect this equity. Now, God forbid he dies in the 20th year. You guys may have enough money built up into this thing to pay off the back end. You'll definitely have enough in the 25th year, which would make him, what, 90 years of age, so he may not be around at that time. So you definitely need a solution, Mrs. Jones. And this is about the average age that you may find, you know, selling this stuff, especially if you're in the state of Florida, a lot of southern states, retiree states. Up north, it could start at 50, could be 30 years of age too, but most of the time it's in between 50 and 60 and 70 years of age, people buying new homes and busting the mortgage out for 30 years. They don't care because they're dead, you know. But if they have a loved one, they must protect it. So we have all these scenarios, and we're going to put them all together now. When you make that first call, like I said, if you don't have enough leads, you're dead in the water. You've got to stop being afraid of ordering leads. The only reason you would be afraid of ordering leads is because you're intimidated by your own potential and you don't believe in your own sales abilities due to the fact you don't have enough experience possibly. The only way you can get true experience from this situation is by buying leads. So buy the cheaper leads then, guys. I started out in the industry buying 50-cent leads, dollar leads, and they worked. People still want to see, look, if they have life insurance, that's a fantastic thing to call people with life insurance. Hey, Mrs. Jones, I can get you double the amount for about the same price or even beat the premium 9 times out of 10. For now, it's just information. So I'm already in the area. I'll just pop by and give you the information, and you can just take a look at it and think it over. And that's all you need to say, you know, to get into the house. But get your lead order in. Spend $500. Spend the $1,500. Get your lead order in weekly. Replace it. I always teach you guys to use this money and just replace it. If you spend $500 the first week, you should spend $500 the next week. But all you did was use the same $500. It's one investment, maybe 2. Okay. So get good at just and learn your products too. Learn what the products offer to the clients and get involved with that also. So we go back into this. We have their Social Security. We have their life insurance on the table. Again, if you find life insurance products, you know that term is bad, you can replace that. An IUL, you can replace that. A UL, you can replace that. You can even replace final expense life insurance. Look at the cash value. I want to embed into your minds when you're selling, I want you to present cash value as a piece of the puzzle to their policy. Explain cash value when you're selling. Let them know that it's a 2-sided policy. Later on, it can pay for Mr. Jones, can have the cash value. Mrs. Jones, you get the death benefit. If you both, God forbid, die, your kids get it. So it's all benefit. You're all going to make out. Use the cash value to replace policies. Get people's bills paid off. If they're willing to open up and you know the bills that they have, they might have credit card bills that they don't want. Cash value will pay that. They may have the house that they want to pay the back end off. Cash value will pay that. Might have a kid they want to put through college or put a roof on the house. Cash value pays it. So you can replace products if you know how to talk to them. Find out why they need cash and replace the product. Because I can replace a policy and get them less death benefit into a better product 9 times out of 10. It's usually a term or an index I do this with. But I can get them a better product because the product's going to die out on them anyway and get them less face amount, but they need to buy it anyway. But they need the cash too. So to review, we went over Mr. Jones having $1,500 in Social Security. How long does it take before Mr. and Mrs. Jones receives that? Mrs. Jones, how long will it take for Social Security to pay that? Now, I know I'm just asking this question, and you guys, know the answer, I hope. It is 6 to 12 months. Now, the worst case scenario, it takes 12 months for you to get this, Mrs. Jones. So here it is. Here's the pivot. Mr. Jones, while she's going through this, she doesn't have your $1,500 anymore, so she only has $1,000 to live on. Do you have anything else that she can survive on? A pension, maybe a 401k? Yeah, I have a 401k. Well, what is that valued at today? It's about $250,000. You know, and that's where you fish that out. You know what? I'd love to show you something that has to do with this. I'm going to show it to you a little later, but with this, you can also, if somebody denies, I just want to stop for a second. If somebody doesn't want the life insurance because the premiums are too high, you can then go back and say, Mr. Jones, you know what? You already have the mortgage taken care of in your $250,000. But let's take this down. Let's say you run into somebody and say that they have a mortgage and the mortgage is $200,000, okay? And he has a $100,000 401k. If in 10 years we know that we can make this $200,000, you got the money for them, you know? So just in 10 years they can pay the house off if they choose to. We don't have any retirement fund, but they can choose to do it that way. So you can, instead of using life insurance or mortgage protection to protect mortgage protection on a home, you can use the annuity and there's no money out of their pocket, okay? So some people like that, and it helps you sell this product. It works very, very, very well. It just worked last week, in fact. So like I said, keep the lead order coming in and keep going out and keep. You got to fail a couple times, but once you fail, contact me. Let me know what happened in the house. I don't want to hear when you sold. I want to hear when you didn't sell. Let me help you guys out so I can figure out what the hell may be said. It could be the difference between tonality and how you say things. If I talk softly to you, if I talk louder to you, that could change the sale. So learn how to use your tonality on the phone and in person with people. Talk exciting about things. Talk down about things. Get involved in the sale and you make more, okay? I know it's strange, but it's just how it works, I guess, you know. You can also be a very serious person and you can be very number smart because at the end of the day, it's about the number. If the number fits in the budget and it makes sense, they're going to buy it. That's your job. Make sense of the numbers. Get somebody, start selling $100, $200, $300, $500 premiums. Why? Because you can. Stop selling $30 products, $50 products, and making a couple bucks. Start selling in this category, and you will make more money by selling less people. And you'll have less lead costs, but you'll make a ton of money this way. How do you do that? Again, it's in the script that you're using in the house. All you're doing is presenting what they have, and it's how you ask. Out of the two of you, who has the two of the higher Social Securities? And the reason I'm asking, because Mrs. Jones, it's going to take you 6 to 12 months to receive this. I want to make sure that you're safe. Look, I look concerned. I want to make sure that when you get that you have enough money to survive. So it takes 6 to 12 months. This is an important part of the puzzle. Now, Mr. Jones, if God forbid she doesn't have this in time, do you have anything that replaces the money that's lost? I have a 401k. Okay, great. 250,000. Great. So that becomes hers. She's the beneficiary of that, right? There could be taxation on that. There could be issues with that too. So if you teach them about taxation on this, if she's paying taxes on this and she's paying for the years gone by to receive this as a beneficiary, it could be high and she could lose money out of this. So in the annuity product, she just becomes the beneficiary and it becomes her product as a death benefit, which is great because usually the death benefit is more than this. This could be $260,000 death benefit, even though it's $250,000. Now, the other thing I want to show them is, here's a great way to sell this. Mr. Jones, how would you like it if I could, not only show you a way to double your money every 8 to 10 years, but if I could make you money today, I can make you several $1,000s right now today, and I can prove it to you. I have a way to take this $250,000 and add 7% to it today. Would that be something you might be interested in? Does anybody know what the hell that comes to anyway? Let's say it's
bonus annuity.
How much is it? Oh, I thought somebody was telling. 7%, 25,000. Let's say it's $20,000. So he goes from $250,000 to $270,000 overnight. Would you be interested in earning $20,000 today? Yes. Let me show you how to do that. And on top of that, here's the exciting part. On top of that, you're going to earn about 8% annually. Okay? And you'll never lose any of this. So when the market depletes and the market completely collapses or goes down even, if the market would collapse or if the market takes a dip, you're not going to lose a dime. So let's say next year you go to 8%, you got $282,000, and the market would dive. You don't lose any of that. Right now, you stand to lose a chunk of change. If you lose 30% of this, you don't have enough life to get it back. So don't participate in the downsides anymore. Save, protect that $250,000, add some money into it, turn it into life insurance, and get your wife all of the money, not a small portion, not a smaller portion of the money. Okay? So interestingly enough, when you talk like that, people want to see what you have. It's like I'm giving them the surprise. Hey, how would you like to make 20 grand? John Warner, would you like to make 20,000 bucks today? You have 250,000 put away?
Yeah.
Okay, let's do it. See, that was easy. I put a smile on his face. So there we go, man. At the end of this ride, when you get it all done, you have presented to them the actual need. And you didn't present what there was in their mind, which was you were there for final expense to sell them a burial. What you found was all kinds of different scenarios that were going on, and you corrected them. Go in to correct the issues at hand and fix the frickin' problem, and you will sell more life insurance than you can imagine. And instead of just coming in to sell, hey, it was like me 10 years ago, I'm selling $10,000 products on top of what people have. And then I said, it clicked with me. And I said, wow, there's cash value inside here. Why wouldn't I pull the cash value out and just put all the premiums together from the life insurance and get one big premium? That's how I sold large products all these years, selling $2,000 premiums sometimes. And you know where I get some of these products sold at, and I show them interest on this money, is I will see people trying to double the amount that they pay on their mortgage, trying to pay the mortgage off, but the house isn't protected. So when people are doubling up on their mortgage, I have people that pay $2,000 a month on their mortgage, plus $2,000 extra to pay off in half the time. $4,000 a month. Now, it is an investment where I am anyway. It's the land of the 6% home annually. So over here, though, I can teach them how to earn 7% interest, protect the house from Mrs. Jones, use this $2,000, invest it, and then at the end, in 20 years, or even closer, maybe 10 years, in an index universal life, I'd be able to pay the house off due to the interest. So you have to do a cash value sheet. When you do the index products, you do the illustration before you go in the house. So you're literally printing the illustration before you walk in. How do you do that? Well, if I see on the illustration, let's take this one, for example. This is a mortgage protection page, lead, okay? This says that the house is $114,000. I know by demographics and that may not be. That might be just what they owe. It might be a refinance too, so be careful. So I understand that with that amount of money, that what I'm going to do is being smart enough by demographics. If you know the demographics in the area that they live, you can think, how much do they earn a year? So you can think, I want to get $25,000 for sure. Because in an index product, that's usually the bottom. That's where they start. So I know that I can get that. What does that money do? What does a little bit of money do? It's $114,000, Jay. What does $25,000 do? Well, what that does is that protects them from this. They have to sell the home, and that protects the equity. Your number one goal is to protect this equity from the bank. Remember, I told you two people get this. One, Mrs. Jones, or the bank, or the kids, grandkids. Add kids, grandkids. Get them feeling this in their heart. The bank. Guys, mute out. Everybody mute out.
Just on a little conference call.
Hey, if you can all hear me now, can you please mute out? So we got the bank, we got the kids, we got the, so the equity in this thing is what you're protecting. You take this money, you pay the back end of the house off, or you get the sale of the home. That's the two ways that works. So you get a $25,000 policy. Now, on top of that, I want to get another one for $50,000, and then I want to get one for $100,000. So you bring 3 illustrations in the house with you. Print them up at your home, okay? And then you walk in the house. Why do you do that? Here's why. If you guys take this all in and take this seriously and stop playing, you will make a lot of money using these strategies. I'm telling you right now, you can make a lot of cash doing this. So you have this $25,000, you have $50,000, and you have $100,000. The reason I'm doing that is because when I go inside the house, I'm able to open up to the cash value sheet and show them what their money's doing. I'm able to provide them with the evidence that if they're paying $200 a month here, $150 here, and $175 here, these are the 3 options. This one builds huge cash value. It's at 7% interest. So in 10 years, you got something like I don't know, you got $20,000 built up. So Mrs. Jones, you know, you got a way out too. Again, explain it. Mr. Jones, if God forbid Mrs. Jones dies, you just pull this out, okay? Because you can afford to stay here, Mr. Jones. I need you to start explaining the difference between the two. Hey, Mr. Jones is safe. He's okay. He doesn't have to go anywhere. He earns enough. This playing field is definitely uneven, guys. Mrs. Jones, you need a way to protect you. And you guys need to take in fact that there's going to be inflation over the years. Things are on the rise. Mrs. Jones, you can participate in the downsides of the market having that kind of product he has. Not only could your husband lose money, but you could lose another 30%. That's 60% total that you guys lose. Subtract that from your 250 grand. All right, let me ask you guys, anybody have any questions about anything? Anything that you're running into, anything that I didn't review that we need to go over again? Is there any questions? You can type them in, or you can just open the mic up and talk. Does anybody have any questions? How do you do this? How do you do that? Any questions like that? Where do you get lead orders from? How do you get apps? Where do you hire new people from? How do you make 20 grand in a week? You know, let's talk about that. How do you make 20,000 bucks in a week? One, you sell higher premiums. You do exactly what I'm telling you. You go in there and you find the real need. You get them to pull out products so you can review what they have. You find out what's left over at the end of the month. It's important. Find out, is there $250? Is there $1,000 a month left over, Mrs. Jones? What are you closer to? I'm closer to the 1,000. Great. In my mind, I know this isn't, the affordability thing's out of the way instantly. I know they can afford it. If you walk in a house and you put down, hey, Mrs. Jones, can you afford 50 to 100 bucks a month? And in final expense, you may have to do that. Yeah, I can afford that. Which one are you closer to? 50. Okay, well, I know that now I have to spend 20, 30 bucks on a policy. So this gives you an avenue on figuring out immediately whether they have money or not, okay? So to sell that, you get 40, 60 leads a week. It should be A, B leads, it doesn't matter. The lead's the lead at this point. But you go in, you sit with 10, 15, you sell 5 to 10, either way. This means you have to have larger premiums. This means you have less. I can do 20 in that, sitting with 5. I may have 10, I may have 15 on the board. I may not get to them. I may sit with people for 2 or 3 hours going over this stuff because they have annuities, they got things to look over. But at the end of it, I walk away with $300 premium, $100,000 401k. So here, you know, let's say I earn 10,000 bucks here. Let's say I earn 4,000 bucks here. 14,000 happens all the time. Now I'm real close to my sale, 20 grand. So it took one sale sometimes to get close to your goal. If you do it that way and sell the annuities, you guys will definitely hit 20 grand a week. In every 10 leads that you have, one person should have something that has to do with you presenting an annuity. Now, it doesn't always happen with final expense. It could be 20 leads with that. Could be 30. But somewhere in that puzzle is an annuity. And if you don't start fleshing them out, you'll never know if it's there. That's why this presentation is valuable to you. Asking the way I ask, presenting it the way I present it is vital because it doesn't pry, it just asks. It's just opening people up to the opportunity that is in front of them and finding the real need. If you can do that, you'll make a lot of money and get with your upline and get your lead orders in. Find a way to get the lead orders flowing. I don't know, people with financial issues, stop spending money, do what it takes, get a loan. But people with money should be investing. This is your business. How can you not want to invest? Make sure you invest and start making some money. I don't know if anybody else sells differently than this, but this is the way I do it. But, you know, it works, and it works every time I do it. For those of you jumping off, it's still not over, so I don't know why people are jumping off. I wanted to explain one more thing. When you're hiring new recruits, okay, when you get into this and you're hiring new recruits, they need to be able to duplicate this. So this is how I duplicate it with you. I don't know, you have to make a decision on what you want to sell. Do I want to sell mortgage protection? There was a time I didn't know how to sell it, and I didn't know how to do it. I invented the way. Nobody taught me anything about it. Final expense. If you sell final expense, be the best at it. Mortgage protection, be the best. Do I want to sell annuities? Then you got to ask the question, how do I do it? When you're laying there or sitting there thinking about your business, if you're not thinking about it, start thinking about it. You are a 1099 business owner, not some salesman. You got a 1099. You have a storefront that you just don't have yet. You got mortgage protection can earn you $20,000 to $30,000 a week. Final expense usually average about $10,000 to $5,000 a week, and annuities can be $10,000 to $100,000 a week. What do you choose to do? Look at the numbers. Doesn't it speak volume to you what to do? These are the two I choose here. Let's put a check here and a check here, okay? So get involved and start learning the products. I think the only reason you're stepped out of mortgage protection is one reason. You don't know how to do it, right? So what I'm teaching you is how to do it, but learn the products. If you guys don't pick up the products I tell you to pick up, you're not going to be able to do it ever. If you're happy with $2,000 to $3,000 a week, stay where you're at. I'm not satisfied where you're at. I know you can do more. I know you can. There was a time where I was at $1,000 a week. I sucked at this. I really couldn't explain anything. I didn't know anything about it. And I just want you guys to open up your opportunities. Can you get your money scenarios examples online from the IULs or IU online? You get them from the companies. So ask that question out loud, John, so I can understand it better. I really want to help you there.
Jason, can you hear me?
Yes, I can.
Okay. Can you, instead of calling the companies, can you get online and do they have a...
no, they do not.
Okay.
Sorry, you have to call. Now, they do have a strategy. They do have yeah, you can get online and do it. Right, you can show it on your computer right in front of them, and you can adjust the numbers. Yes, they do have that. I'm sorry. It's through the company is what I mean.
Okay,
yeah.
Great.
So you guys, what he's asking is, can you get online to show the proof of the cash value through one of the company's links? So all you do is go to their link, and you're able to type in $100 a month, and it'll show you the cash value that they're earning. And it's awesome because then you could throw in $200 a month too. Now, John, there's a reason I do it differently. I want them to have a tangible thing in their hand. I want them to hold it and feel it and see that it's real. I've done it that way, and flipping into paper works a hell of a lot better for whatever reason. I'm not saying your way wouldn't work, but if you can do both, it'd be great too. Have them follow along while you're doing it. But just do it any way you can, just whatever you do it, just to make sure you're doing it, period. You know what I mean? So we have to get you guys signed up with those companies too. That's
Jason,
yeah.
Real quick, what I'd like to do, just like you said, before I go into that appointment, I'd like to be able to hand them, print them out at home, and then hand it to them.
That'd be great. That works every time. Having that tangible product in their hand works fantastic, guys. So when you're selling this, open up to the cash value page, show them the cash value page. It has a list, it has their age, It has the years gone by, so you can look at the 20th year, the 15th year, and you can come right across here and show them what the cash looks like. It says 7.14% interest here, so it tells them what they're earning, and it shows the cash value. But you have to remember something, ladies and gentlemen, that there's this cost of insurance to these too. Okay, so over the years, these get inflated also. Here's the good side: is the other ones that usually go out of play are earning 3% interest. So this one stays in play a long time. It's like 30 years, no matter how you sell it. So it stays in play either 20 or 30 years, which usually with older people gets them to death at least, just paying the minimum. But if you find, like I found a 30-something-year-old just 2 nights ago, they needed another, they have a 401k, it has nothing in it. They wanted another portfolio. So they were asking me, do I do what stocks and things like that? I put this in front of them, and now they're putting $200 a month away, which illustrates them at like $250,000 in 20, 30 years or something like that. So it doesn't, in fact, how about this? You yourself should have one. They pay you as earned on it, so you're getting the policy paid for, plus you're earning interest. So if you guys want to get wealthy, don't just do it off your own pen. Do it off other people's pens and start investing into these products that are offered. If one of you has 10, 20, 30, 50, $100,000 in a bank account somewhere, allow us to write your own annuity. Get paid on it. Get some bonus cash. But start investing into these products today. Get them on your kids. Get them on your family. Really, I don't mean to hustle your family, but this product is unbelievable. Living benefits. How about if you have, when one of us has a heart attack? Out of all the people on here, Facebook and you, there's going to be somebody out of us that gets a heart attack, stroke, cancer, heart valve replacement, car accident, can't sit on the toilet, can't walk ourselves around our home. Any of those scenarios happens, that $100,000 is yours while you're alive. So it backs up your health care. So if your health care doesn't provide for you, this will. Imagine having a heart attack and sitting on a lottery ticket that's worth $100,000. And it happens to us a lot. We get people calling us. I've had a heart attack. I got cancer now. Can I get my money? Yes, you can. Yep. So they actually give you 95% of this in some scenarios. The scenarios are different throughout the list, so I'm not going to tell you it's always $100,000, but it's a lot of money that they receive. Now, guys, I hope that everybody got a little something out of this. Let me tell you one more thing. Today is a great day to be dialing. Today from 9 to 10, when I start, you dial. From 8 o'clock in the morning, you can start your dials on a Saturday morning. It works. Trust us, we do it. From 8 a.m. to 10, you got 2 hours there. Why? Why do you think I suggest that? Yes, it's because everybody's home. Everybody's at home, guys. They answer the phone. Guess what? They filled the lead out. They got the 24-hour call. Did you get final expense leads, by the way? They're 24 hours old, guys. Mrs. Jones knows your name. If she doesn't and something's wrong with your leads, let me know. We have multiple lead vendors. There's a ton of places. So if you're ordering leads and you're sitting back waiting, the reason you're waiting is because you never order leads all the time. Use different vendors and keep the leads coming in. Stop being so afraid of it. I'm telling you right now, when we went to that venue in Maryland, some people were spending $1,500 a week and then reaping $30,000 a month on average. Low months, $20,000. What the hell is your problem? Look, you're going to have a problem. You're going to have 1 week where you don't make any money. But if you start judging your income on a month, not a week or a day, you'll get this company, you'll get this style of business down. Okay? Stop presenting yourself with, oh my God, I didn't sell today, right? I didn't sell this week. You got 3 more weeks coming to you. So you got 30 to 20,000. Even an average, if most of you would just make $5,000 a month, you'd be good. Of course, you're not going to be investing that. But if your low investment is $300 to $500, I should see all of you ordering leads this week. Honest to God, you should really. Anybody that's not with the organization yet, or doesn't have a licensing done yet, you need to contact us as soon as possible to get that taken care of. So for now, that's about all I got for you. But if anybody has any questions, please open up to the questions. I mean, that's why this thing's here. You can ask questions here. Ask. Anybody have any questions? Please ask. So everybody's going to sell an annuity this week? Has anybody ever sold an annuity? Anybody? Let me ask another question. Anybody ever earned $10,000 in a week? 4 weeks in a row? There's the curveball. Can you imagine doing that and making $40,000 a month?
That would be lovely.
It is. It really is. And I can tell you that, thank you for coming on in, that you can do it. And if I got to slow down on these things and we got to spend a boot camp on this, I swear to you guys, after all these years of doing it, my way is the best way. I'm not just bragging. It makes more money than most people do. It pulls out more annuities than I've ever seen. I've impressed people doing that. You know, I don't know of anybody that's ever sold 3 annuities in one day, but I did do that for $1 million day. I set up 3 where I had the president of the company flew in because we weren't even licensed with the companies at that time. We needed his license to sell the products, but at the end of the day, we got these people protected and saved. And that was $1 million. That was $86,000 in a day. We split it. In fact, that's what got me to Florida. So if I can do it in three in one day, you can surely do 3 in a month. You know what I'm saying? That doesn't happen all the time, and that never happened after that. But I'd like to go to I'd like to hold a boot camp, John. And I don't know how many of you on here. There's a few of you hanging in there, and I appreciate you being on this and listening. I don't know how many of you would spend the time to spend some money and allow me to host a boot camp for 2 days at a hotel room. But I would love to host that. And if I get anywhere from 10 to 15, 20 people, I would do that. Because if I pick this thing apart and I detail it, because I'm doing this in an hour, I'm trying to get you all this information in an hour. But if I pick this apart, take it piece by piece and slow down and answer your questions, you're going to leave there with the education. The education you need is going to be in your hands right now at that point. And you will walk away with the knowledge to earn endless amounts of money. Because I would, fix it so we can do recruiting. And recruiting is important, but you got to prove that the system works first. Unless you want to do it in an MLM business, and you can do that too. But that's cool. I'll take the recruits and just throw them on this. Get them trained. But each and every one of you has a skill to be, at least a 6-figure earner. Bottom line. But how are you going to start it? You've got to get your lead order. Got to do it. Just stop fighting yourself about it. Stop having a separation anxiety, and do it. What's up, John?
Oh, I accidentally pressed raise hand. We could go offline on this, but if you're ever interested in coming up to Charlotte, North Carolina, I can gather my whole team. We'll talk about it offline and do a 2-day. Yeah,
that would be something I would do for you, John, and me as soon as possible. In fact, I do things quickly because I know that these people are out there. They're struggling. If you would ask your team, they don't want to admit the problems. There's a lot of you that don't raise your hand or talk about it because if you would talk, though, there's other people having the same issues. There's not anybody on here right now doing $500,000. So if that's a big number. Now, if that's not your number, I don't know why, because it can be. The only difference between that and $100,000 is a few annuities away. It's not that difficult to increase your income, guys. It really isn't. But if you don't have a format and a process or a system in place, it won't work. After all these years of doing this, I just tell you that you need to present it this way because it asks and it pulls it apart to where you're not subjecting them to feeling like they're giving you information. It's like, when you go sell things, that people don't want you prying in their shit. You're trying to get all these larger numbers out of them to know where they end up to help the need. I don't talk too much about why I'm here or what sometimes I don't tell my name. I just get right into it. I'm so excited to be there to help them. I know what I'm capable of doing for them. The Social Security thing is huge. If you just remember that Social Security doesn't pay out for 6 to 12 months and circle that 12 months, Mrs. Jones, you're going to be left with only $1,000 a month. So let's do something, Mrs. Jones, so we can help you. Let's pick apart your bills just when Mr. Jones is alive. So your mortgage is this. I have a sheet that does this for you. If anybody wants a sheet, you got to text me your fax number. This is $1,000 a month. The electric bill is $100 a month. Automatically, I know she's out. That's where you can use this. Use this little piece of the puzzle to sell final expense. So, Mrs. Jones, for 12 months, you're not going to have 1,000 or 1,500. Multiply that by 12 and get them a policy for that when you're selling final expense. Use this to sell final expense. 1,500 times 12, I don't even know what it is. 25, 30,000. I don't know how much it is. I'm thinking fast right now. $30,000 policy is what she needs for 1 year. That's how you can sell final expense because it's going to happen. Okay? Now, remember, on the flip side, what happens to Mrs. Jones if she dies? What does Mr. Jones get? He gets the cash. So it's 2 policies in one, guys. 6 to 12 months. Usually it's going to be 6. Worst case scenario. You have a $30,000 policy to fill that void, Mrs. Jones. Get yourself on your feet, bury him, move out of the house, pay the mortgage, pay the bills. Mr. Jones and Mrs. Jones is taken out. You take the cash. You know, say in 30 years or 20 years from now that there's $10,000 built up into this. That's what you're going to walk away with. So it works as 2 policies in one. This is how you sell final expense, exactly how you sell it. Use that void right there, and you will sell more final expense. Okay? Don't just bring in the hey, I'm here to give you a cremation or burial. They need to know why and what is in their way. What's good? They don't know this. I can guarantee you they don't know that. When you open their eyes up, you become the professional to this. Holy shit, I didn't know that. Wow. It's interesting, you know? Great job, guys. Thank you for hanging in there for 1 hour. John, let's talk about that after this, okay? I have to take my mother-in-law to her birthday party in Orlando. Tell you, I'd rather just keep doing this. We're going to host a boot camp. John, that would be great. Anybody that's interested in that, let me know via text that you would come to where? Where you at, John?
Sorry, Jason, Charlotte, North Carolina.
Got it. Anybody have any more questions before we get off? Any questions?
I sure do.
Go ahead, brother. Go.
How would you sell final expense to retired military?
Retired military. If I have a military individual, I also know that they could be collecting Social Security. Now, this depends if they are married or not married for that scenario I just put up. Retired military, same thing. Mrs. Jones, you have $1,000 a month. He has $1,500. Mr. Jones, I need you to understand, Mrs. Jones could be hurt by the fact that she's not going to have that income. It's the same scenario, boss. So it doesn't really change because they're military. They still get Social Security income. What I'd ask on top of that, Mr. Jones, because you're military, does she get any of that military money? Does she receive any of that? Because that'll fill that void too. But the same scenario, remember, 6 to 12 months, she has to wait to receive that $1,500. Does she get military money? This is going to be knocked out. I don't care if you're military or not. That's out. So you need to fill that void. She starts a new life at 1,000. What's her bills? Remember, very important, if you don't go over the bills, what are you to do? What are you to do, guys? How do you find out what's left over? You just write it down. Do you have anywhere between 250? You can look around the house and tell what the number may be, you know? 250 to $500 a month left over, Mrs. Jones, Mr. and Mrs. Jones. You have 250 to $500 left over every month after all your bills are paid. Every bill's paid, everything. Yes, we have $500 a month. Boom, I know what I'm capable of selling. Now I get back up here. I am talking about the Social Security. Who asked that question, by the way? What's your name?
It's Robert.
Robert. So I have the ability to sell this, Robert, due to the Social Security still. That opens the door up. Now, if they have military money, you need to understand that, but you also need to know, is that she get 50% of it, or does he have a pension? Does he have a 401k? This is good, Robert, because now you're opening doors up. Mr. Jones, we know that your Social Security's gone, but she has 12 months to receive it maxed out. That's 12 months. Now, that's in today's era. It could be more. It could be later on. It could be 24 months. You know, how many people are dying? Do you think if a million people die, do you think they're going to pick out all that money at one time? No. $500 is what you're left with a month. So let's figure out a scenario using this budget. Now you can start feeling them out. Start talking about their budget. Start introducing them to the fact that they're going to spend some money. So, you know, let's use your budget. Stay in budget. We're not here to take any food off the table. Reinsure them and let them know that she still has these bills to pay. When this is gone, she has $1,000 a month plus your military money. That's $250. So she has $1,250 a month left over. Let's get her a little money to fill this void and still bury you. What I think you need to do, boss, is go check out what the military really offers people. Okay? Find out what they're really getting. Some people tell me that they get completely nothing, that they get the hole, they get the plaque, but the hole's not dug. Some people tell me that the hole's dug, they get everything, they get the coffin, which I've never seen to be true. They usually get the plot and the plaque. The hole still needs dug, the transportation of the remains, taxes need paid, whole bind, plus the bills need paid. So find out what the military offers. Call a veteran's office and just ask. Go into a veteran's office and pick up a pamphlet. They're free. Learn about what they offer the military, okay, guys? You really need to know that. That's a great question. Did I answer that question for you, or are you still confused?
Nah, that pretty much answered it, because this guy, he's single. He divorced his wife, so that pretty much answered it.
Let's take a single guy and how I would handle that. Now, he doesn't have anybody, but what you need to focus on, boss, is, so do you know his name?
What was that fellow's name? Paul.
Paul. We'll call him Paul. Okay. Hey, Paul. You know, who's your beneficiary? That's where you guys need to tag on the final expense. Who's the beneficiary? Who's going to be left with all the bills when, God forbid, you pass away? You know, your final expense, final arrangement, cleaning a house out, maybe paying the mortgage so they can keep the house. Well, who gets that? My son. Do you know who gets it? Did you ask that question?
Nah, I sure didn't.
Okay, there's one mistake that we caught, though, that you're going to grab now and keep it forever. So you're going to get, who's your beneficiary? I got my son. Now we have the heartfelt thing. It's not no longer a product. It's a sense of reality. It's really my son gets this money. So what are we looking at doing anyway? So why do we need it for a military? Paul, do you know exactly how it works with the military situation? Some people answer differently. But if you knew, brother, if you knew exactly what to tell Paul, it'd be a different scenario. Go get the book from the veterans office. Show them exactly how it works. Okay, they're going to give you the plaque, brother, and they're going to give you the hole. These are two things. That hole's not dug yet, and that plaque's not put in the ground for free. So let's get real on this. If you want, we can call the veterans office now, and we can figure this out together. I'm here to help. I want to make sure your son's not left with a debt. So what they do, too, is if he doesn't pay that debt, the funeral home is going to charge him 17% interest for the rest of his life on money he owes to pay this debt off, digging this hole at the funeral at the cemetery. So we don't want him to be left with that. Hey, I'm going to tell you another thing, guys. If you guys can ever walk into a house and somebody has the bill that they paid for cremation or funerals, get a copy of that. Ask them if you can have a copy of it and use that inside homes. Go online and Google images, find a copy of a bill from cremation, funerals, military funerals, and bring it in the house like it's somebody else's. Use that as a tool. Why? Because you're protecting family. So single guy, he has his son to protect. He has his daughter. Why does he protect it? Because the funeral's not paid for. They give you a hole and they give you a plaque. That hole needs dug. On a Saturday, they charge overtime. Your son's in charge of taking care of that. Do you think the military is going to pick you up off the ground if you die right here, Mr. Jones, and pay for your remains that get shipped? That's not in the deal, okay? It comes out of your son's pocket. All these military, all these hospital bills stay in place. So make sure that you get him on that and understand it. Any more scenarios you're running into, brother, in the home? What else you got?
Wow.
Wow.
Always people saying they can't afford it.
All right. The affordability comes down to at the beginning of this thing, understanding what they have. So remember this line. Mr. and Mrs. Jones, out of the two of you, who owns the two of the higher Social Securities? And the reason I'm asking is because if, God forbid, you die, Mr. Jones, Mrs. Jones has to wait 6 to 12 months for this, and usually it's about 12 months now. So I want to know what she's left with so we can figure out a plan together. So if you have $1,500, Mr. Jones, and she has $700, she has to live on $700 for 12 months. You know as well as I do that that's going to be hard on her. She no longer has this income. So, Mr. Jones, do you have anything else to fill the void? Yeah, I got a 401k. That's where you find the extra cash. By the way, do you guys have life insurance already? Yes, we have several policies. 1, 2, 3. Good. Do you know who they're with? In fact, do you have the policies here? Yes. Can you go get those, Mrs. Jones? Thank you. Okay, so see how I pulled it out? I know the income now, boss. I know that there are, what is this, 3,200? Is that right? No, 20. 15. 22. Now, if they're at 2,200 plus they got the 401k income, let's add $1,000 onto there. They're at $3,200 a month. You now have the avenue to explain to them that, hey, do this. Here's what I want you to do. If you can get them to say this to you, I want you to do this. Let's say that you know that there's $3,200 in income coming in, okay? I want you to write down on a piece of paper, Mr. and Mrs. Jones, if I asked you a question, could you survive on $3,000 to $3,100 a month? Did you survive on that? All your bills are paid. Did you survive on that? So, yeah, I can survive on that. Usually they say yes. There's your $100. This one can get you 200. Now they just admitted that they can survive on the larger number. You see what I did? I rolled it. Instead of saying 250 to $500, which you can ask too, on top of that, what do you guys have left over a month? You have about closer to 250 or 500. We have closer to 500. We have closer to 250. Whatever the case may be, you know what size policy you can sell. 9 times out of 10, guys, you can sell any. Lowest policy you should sell is $50. Top end, you can sell $2,000 premiums. How? Find it. It could be doubling up on their mortgage. They could be paying frickin' bills that they don't need to pay. Like, I even get people to change their mind about their credit card bills. I say, let that shit die with you. If you don't need it anymore, let it die with you. You don't have to pay it, and you're wasting money and your family's gonna hurt. So take that credit card money and put it towards this policy to protect your family and your earning cash value. Now, here's the secret. You want to pay that credit card debt off later, you have cash value built up. Pay it later, but earn interest. They're adding interest. You need to start reversing your way you're thinking about this, Mrs. Jones. So if they can't afford it, you need to show them how they can. Remember, you've got the Social Security. Say to me, can you say that line to me? Out of the two of you, who earns the two of the higher Social Securities? Can you say that?
Yeah.
Go ahead and say it.
Out of the two of you, who has the higher Social Security?
Who earns the two? Out of the two of you, who earns the higher of the two Social Securities? Right. And all you need to add into there is the reason I'm asking is because Mrs. Jones has to wait 6 to 12 months to get that. It's usually 12 months. So we don't want her to be without your $1,500. Hypothetically, if it's $1,500, right now it's a hypothetical. Hypothetically, if it's $1,500 a month, Mr. Jones, she's gonna have to wait 12 months. So what exactly Who has the two or the higher Social Security? Oh, you're not asking for the number. You're asking either the two of you who has the two or the higher. Okay, I do, Mr. Jones. Okay, great. About how much is that a month? That's about $2,000 a month. Okay, Mrs. Jones, just to understand the scenario, what is yours? Mine's $1,000. Okay, so Mr. Jones, she loses that. Just to wait 12 months. What we need to do is fill this void for her. So I'm going to look up a product that kind of fills that void for her, so she can make it 1 year to make some decisions. Okay. You understand how I got the number now, boss? I know. So you can also add in the fact that they have $3,000 a month. Mr. and Mrs. Jones, let me ask you a quick question. Could you survive on $2,900 a month? Could you survive on that? Pay your bills and everything? Yes, we could. Great, because this is taken care of then. You'll have no problem then. You see that? I just reversed it everything, and I had them say yes. They didn't even realize they were doing it. They just said yes to the product because they can't live on that number. They can't. But make sure you're showing all the benefits, show the cash value, brother, and use that first line. You watch how many more products you sell using this scenario. Watch how it works for you. It's fantastic the way it rolls. It is unbelievable what you'll be able to do this week. Now what I want you to do is get your lead order in. Stop being afraid of the leads. And if you have trouble inside the house, I want you to say this. Mr. Jones, I'm going to find out how many discounts I can get you, okay? Say you're having a problem in the house. You have no idea what to do. Give me a second. I'm going to find how many discounts I can get for you. Walk away. Get on the phone and contact me. Send me a text. Say it's an emergency. Say it's an emergency. Text me. There's a number. And I will put the phone on speakerphone, and I will talk for you. I will give them reasons why they have discounts. Okay? Mr. and Mrs. Jones, glad he's there helping you. I tell you what, I'm at the office here, and I'm just going to find as many discounts as I can. So, Mr. and Mrs. Jones, I'm going to do you again. Who has the two of the higher Social Security? That's me. Okay, great. And you're earning about what? You guys earn about $3,000 to $5,000 a month. Which one are you closer to? We earn about $3,000 a month. Okay, great. Is there a possibility you could live on $2,900 a month? Do you think you could make that work? Yeah, we can do that. Okay, great. Hey, Josh, why don't you do this? Rate them up something in between $75 and $100. I have a discount here that's closer to $75, but the $100 product looks a lot better. And then what you're doing is you're on the phone using those numbers. They have no idea what just happened. Where's the discount? I'm sending it over to you, Josh. Here's the discount. But you look up the numbers in the app. Do all of you have the app on your phone or in your computer to be able to do this thing? Do you know that there's for $19 a month, you can punch in one name or one age, and it pulls up every product that we have, and it tells you the numbers? So ask Alyssa. I want all of you to call Alyssa about that and get that product. You'll spend less time inside the house if you do it this way. So what you're doing, it's an app. That's Alyssa's numbers. Call Alyssa for app. You punch in one number, age, okay? And it pulls up everything, non-smoker, pulls up all the companies you work with, and it gives you all the premiums that you need to spend or that they would spend instantly, like that. Okay, so you need that. That's a tool. It's $19 a month. That's it. You can pay cash for 1 year or something like that, but that's an awesome tool. Now, if you're selling final expense, you should have a great lead order. I mean, you need, bottom line, you need more people to see, man. Spend some money. Josh, you able to spend $500 on leads if you know you're getting the $500 back next week?
Yeah, if I can do that, I would.
What are you able to spend?
As of right now, I'd be able to spend $300.
All right. So we're going to take that first 300. What we need to do is we need to form that into 500. And we need to take that 500 and we need to transform that into 750. And we need to take that to 1,000. So that 300 using this technique, brother, is going to be the way that you get that premium up or your lead up. but you got to stick to this and you got to keep training. I'm telling you, these scenarios work, these strategies work. So out of two, who has the two of the higher Social Securities? Reason I'm asking is 6 to 12 months to survive on it. After that, Mr. Jones, does she have anything else to survive on? By the way, do you have any life insurance? Great. How many policies? Who's it with? Okay, great. Do you have those policies? Yes. Let's put a scenario together that works to fit Mrs. Jones's needs, God forbid, if you're not around anymore. Can you guys survive on $2,900 a month? Find out what their income is and do the reverse rule of it and just find out what's going on. Okay? Any other questions from anybody? Anything else? You got anything else going on, bro? Any other questions? Just ask them now. Okay, guys, if you have not joined our organization yet, I want you to do me a favor. I want you to text me, join, 352-255-2594. And I will get you started in the organization. And, oh, shit. So, I'm sorry. Alyssa's number, by the way, is 412-818-6038. Ask about that app. It's $19 a month. That's my number to join. Guys, I had a great time on the webinar. Thank you for being on here. I really appreciate it. If you have any more questions, feel free to ask. You can text me or call me at any time, okay? Guys, thank you very much. I hope you all got something special out of this. All right, I'll talk to you soon. Bye-bye.